You never want to take coverage away to lower a premium. And a lot of people are, and you don't want to go to crappy carriers either. But some people will right now to save $2-3 grand a year. Middle income has got hit so hard with inflation, they're dropping coverages just to get the premium that they can afford to even keep insurance. So most people are now being insured just for a fire. A lot of policies, there's so many exclusions, literally the only thing you're literally covered for is a fire.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder and CEO of Zana Investments, Tim Little. And today on the show, we have Andy Gurzak. Andy is founder of All City Adjusting, a licensed public adjusting firm. Andy is passionate about protecting his clients and making sure they get every dollar they're owed from insurance. Andy, welcome to the show.
Tim, thank you so much for having me on. It's an honor.
Yeah, and it is great to have you here. I know this has been months in the making. We all have life, it gets in the way, and so we've had to reschedule this a couple of times. So I'm glad we were able to make it happen.
Yeah, I'm sorry. Yeah, it's been, and today as I was heading here after every appointment, I'm like, holy smokes, I better get on the road back to the office. And I literally made it like 5 minutes before 5 o'clock. So I'm happy. Didn't have to reschedule.
Yeah, you aren't the only one, so you're fine. All right, so we'll certainly get into what an insurance adjuster is later, because I don't think that's obvious to everyone. But first, tell me more about your story and how you got to where you are today.
Yeah, I started in, went school, started in construction, did a lot of work in the construction sectors, different fields, went car sales. And then during my journey, I met a PA, a public adjuster that was in the industry for 40 years. After 3 years of chasing him down, finally, he said, hey, I'll show you the ropes. So he mentored me for about 3-4 years. And then went on my own, started All City Adjusting. Again, a lot of things happen, ups and downs of business. And then that got us to where we are today. And then with the growth, and All City now is in over 30 states. So we handle large loss, specialize in landlord commercial policies. So yeah, that's been a long journey. Now that I look back at it, it's been years. Time just went by quick.
Yeah, time does fly. And you talked about finding that person with a huge amount of experience, right? 30 years in the business or whatever it was. Tell me how important it was to have that mentor, because I think that's applicable not just in your industry, but virtually any industry. So talk to me a little bit more about that.
So good that you bring that up. So I was actually we had a construction company. I knew about this adjusting stuff. I met this adjuster years ago. I was chasing him down, but because I couldn't get to him and he just didn't want to give me the time and date, I was actually looking into going wholesaling properties. Did this Flip to Freedom, Sean Terry's like videos. I remember going through all those, and I was ready to wholesale. I already sent out yellow letters. I made that call to this PA, and he finally said, hey, Andy, you know what? Hey, I got some time. I'll show you the ropes. And I'm like, God damn it, all this time, all the money I'm ready to invest in this wholesaling. But I'm like, this is what I wanted to do. And luckily, there was obviously pain and growth, but having that mentor, and maybe it wasn't the right mentor in terms of a mentor that I actually invest a lot of money and time into this mentor. It was a big investment. It was like a college education. But having that someone show you, even learning the mistakes of what that person does and maybe you wouldn't want to do in business was great. So those 3 years, I learned all the yeses and all the nos, all the do's and don'ts. So that kind of propelled me. I was able to, again, know the worst case scenarios, know the best case scenarios. It helped to help me get into the industry that's very hard to pierce and know about because there's so many books about it. But in terms of, you want to relate that back to real estate, if I had that mentor in real estate, whether it was wholesaling or if I knew someone that I could have, maybe if I met someone that I knew that was really successful in real estate, I probably would have chased that person down to mentor me. I was very, very purpose-driven to find someone to help me out, and I paid for it. I didn't get it for free.
Yeah, and I think that's something some of us learn later than others in terms of the value of paying for people's time to shorten that learning curve. I was very much of the mindset, because of the way my parents raised me. My dad was like a TV repairman growing up until that job disappeared, and all they wanted for me was go to college. Just whatever you do, go to college. And so I thought that was the way you learn, get ahead, etc. And as someone who's spent 6 digits plus on college, is there value in it? Sure, but you can get just as much, if not more value, by paying someone who's doing it to have them show you how to do it, because then you're getting that learning by experience thing and the shadowing aspect, which is so important. And I don't think I fully appreciated that until later in life.
And that's my college education was my mentor, was the 3 years I learned. That was my college education. That's the money I spent right there. And I'm like you, grew up middle income. Parents had steady jobs. Life was all good. There was no talks about business or real estate. So
Mhm.
you needed someone to learn, and can you learn yourself and grow a business 100%. To me, just again, that industry I wanted to go into was very not known about. There's not many books, so it was hard to again pierce. So I really needed to someone in terms of real estate. There's more books, there's more stuff. Again, I was going to wholesaling, Sean Terry's whole program, whether you want to call that mentoring or not, but actually that whole program was there, someone to guide you how to do it. That's a mentoring, a little bit different than one-on-one, but definitely was something along those lines.
Yeah, and as you alluded to, not a lot of people know what a public adjuster is or what they do. So, can you pull back the veil a little bit
Yeah.
and help us understand what exactly they are, what they do, and how it's relevant, especially to like real estate investors, for example?
So insurance companies have their own insurance adjusters. Are called staff adjusters, IAs, insurance adjusters. And then there's public adjusters, private adjusters. You call them, most states designate as a public adjuster. We are there to represent the insured. A public adjuster represents the insured, advocates for the insured to maximize their claim, make sure their claim gets paid, walk them through the claim, represent them in the entire claim process. So, as if you're an investor, having a public adjuster on your team is just like having a great attorney, a great tax accountant. It's the same thing, right? Our investors will call us and say, "Hey, Andy, we had this claim. Should we file? Let's go look through it. Let's make sure that if we're going to file this claim, it's going to be worth it for you guys." And when it's a total loss, when it's a fire, that's no brainer. We're going to file. We're going to get them paid, maximize the claim, get everything paid, all their endorsements. But majority of the time, we're looking over their policies, making sure they're insured the right way. They have the right coverages if something happens. Agents are there to sell policies. No knock on agents, but most agents sell policies. They have no clue what they're selling, right? They've never been to a property. They've never handled a claim. When you've handled claims, and I can look at a deck page and see all these endorsements, and I'll tell you 3 endorsements or exclusions that right away catch my eye, and I say, "Hey, I want to see that full policy because these are 3 things you should be like skeptical about." So and again, and that's just that relationship we have with our clients. And that's a no charge. That's just us being a part of a team, a part of an investing team.
Yeah, and so I think it'd be helpful to understand what that compensation model looks like, because I think that's a really good analogy that you're giving there, with it being like a defense attorney, right? They'll look over the documents for you and they'll defend you with the insurance company. How does that work in terms of, if I want to hire someone like that? Is it on a per action basis, or is it on retainer? What does that look like?
Yeah, good question. No, it's all retainer. For us, it's a fee. It starts at 10%. If the claim gets more complicated, or if we come in on the back end, or let's say you've already filed the claim, maybe it's denied, maybe they lowballed you, then we might look at a higher fee. But on anything extra, we were to recover for the client. But majority of the time, it's 10% when we start the claim right from the beginning. A lot of people are like, we've had clients ask, "Hey," or new investors, they've called us, "Hey, we had a claim, but we want to wait till we get an offer and then we'll bring you in." That's like the dumbest thing you can do. They'll knock anything, because the longer you wait, the worse it gets. And then it just gets harder for us to come in, and then it's a higher fee. Then it just takes the claim longer. It's a whole, when we get in there, we're leading the case, right? We're showing the insurance what they owe, how much they owe, for what, the damage, everything. That's the quickest, best way. So it's all contingency. Our fee doesn't get paid till the claim gets paid. So once you get paid, that's when we collect our fee. Oh, there is no other, excuse me, there's no other hourly or any other fees hidden in the contract.
Yeah, and that makes sense, because it sounds, if you're there from the get-go, you can help shape that whole process. But if everything's done, then you're doing more cleanup and forensics of seeing what happened. Is that accurate?
Yes, 100%. And speaking of investors on a team, we had a long couple of years ago, was a client that called Jeff, had a large fire, and we ended up getting him over, it was like $300,000 more than the initial offer. And then when we talked, he got his number from an investor. Actually, he's got his own podcast too. And one of the things he teaches in his classes to his students was, "Hey, here's how you build your team, and here's who you need on your team." And one of the person he emphasizes is a public adjuster. So as soon as he had that fire, he called us. He's like, "Hey, Tyler said, hey, I have to call you guys. I need to find one." And then he recommended you guys. Yeah, ended up being $200,000 bigger payouts for him.
Yeah, and I've had a fire on one of my properties, and it's never good, but you certainly learn a lot. One of the things that I was surprised by is that it's like there's all these different aspects to it, right? There's the building itself. That's relatively straightforward. I won't say it's fully straightforward. Then there's the aspect of how much are you losing in rents and what is the value of that? Can you talk about how some of what are those different things that might be impacted when it comes to what you're going to get in return for if you have a claim with a fire?
Yeah. So you're talking about building the structure itself. Now you have
Hmm.
endorsements. You have debris removal, 5%. If you hit limits, there's a 5% on top of that, which people don't know about, right? People don't know there's building codes. So that now if there's a letter from the city and all the electrical has to be upgraded, that there's an endorsement for that most of the time. There's just different endorsements that people don't know about. And so you have the building, then you have loss of income, business interruption. If let's say it's a rental, maybe Airbnb, you might have personal property. Now we have to inventory all that damaged contents, price it out, age it, put a list together to make sure we get every item accounted for. So in that one fire, there's 3, 4 different coverages they're going after, and then all the endorsements. And you're trying to avoid all the exclusions on your way to getting everything paid.
Yeah, and so as you were saying some of those different considerations, I was trying to think through how I would protect myself as the owner, and say like for example, the Airbnb that has private stuff in it. Like, what are some of the things we can do as owners to protect ourselves, to strengthen our claims? Should we have like pictures of every unit, if that's even realistic? So that they know what was in there and what was part of it, especially for something like an
Yeah.
Airbnb where you're supplying all the furniture. Maybe that makes more sense there, but just curious to hear your thoughts.
Yeah. For Airbnb, for any Airbnb listeners, yeah, you can go and take, but who's got time to take a picture of each item, right? That's the most time consuming you're going to waste, and you might never have a fire. So when our clients have a fire, when we dig through it, we dig through it. We have 4 people that literally go to homes, and their job is just to dig through each item, take a picture, inventory it. Whether it's a pencil, hairpin, toothbrush, I don't know, cigar box, anything that's in there, we inventory because again, $10 here, $10 here, $10 times this much, it starts adding up. And our job is, since we're paid on contingency, our job is to maximize that claim, to look for every penny that the insurance owed. And insurance companies are not going to inventory your contents. There's teams, they do have vendors they'll send out. Those vendors get paid if they get the job, meaning if you give them the construction. So they have no interest in doing anything, right? So
Yeah.
no one's there looking for the insured, but there's really nothing. I wouldn't say as an Airbnb owner, I would take pictures. You want to interview and have a PA before something happens, because again, more importantly is making sure you have the right policy before something happens. That's probably the most important thing that I would make sure you have the right coverages, that you don't have any exclusions, that your deductibles in line. All that is probably the most important thing.
And what are some key points when it comes to some of those things, like the right deductible, the right coverage? What are the things that most people miss, and what are the things that you're always wanting people to think about when they're
Yeah,
looking at their coverage?
know the difference between actual cash value and replacement cost value. Right.
Mm.
Most policies are replacement cost value, but now with people trying to save a dime on their premiums, with premiums doubling and tripling in some states, people are trying to save money. So they're doing actual cash value policies. Actual cash value, if your home is 50 years old, if you have a fire and the damage is 300,000, they'll depreciate 50, 75%, and you're only getting that 25% actual
Mm.
cash value, what the home is worth now. So a lot of people don't even know that. Then there's co-insurance. Are you insured? 80% co-insurance clause. Those are very common on commercial policies. If you have a fire that's 300,000, but your building's worth only a certain amount, you might be underinsured, and now you're hit with a co-insurance penalty of 20% on your payout. There's all these little
Mm.
things to look at. So yeah, co-insurance clauses, RCV versus ACV policies, and then exclusions for roofs. That's very common now. Exclusion, hey, if your roof is older than 5 years, we don't pay for it, or it's only paid on actual cash value. Very common.
Mm.
Vacancy clauses are very common too. Oh, if your home is vacant more than 60 days. Okay, that's normal. We have vacancies all the time, right? But they'll have a thing in it. It's considered vacant if this and this. It's not vacant if this and this. So that vacancy clause is very important as well. Again, a lot of little A lot of little ins and outs in a policy that to look for, but those would be the first ones that come to mind.
Yeah, and you talked about how rates in some cases have gone up by 2 times, 3 times, and that's something that we've certainly seen here in Florida. I'm based out of Tampa. What are you hearing in terms of pain points when it comes to just the sheer cost of insurance as it goes up? What areas are being hit the worst by that?
It seems Florida, California are definitely it. I know Oklahoma, Texas with all the hailstorms, a lot of the deductibles for the roofings. That's going to go across the board. It looks like we're seeing deductibles on residential roofs of 510. So you might have a $1,000 deductible for your home, but if it's a storm damage claim pertaining to a roof, the deductible might be 10 grand, right? For them trying to avoid those claims. But yeah, California, those states that get hit the most are being affected. A lot of carriers are pulling out of those states. So it's going to be interesting what happens in the next kind of couple of years. Maybe new carriers get into those states, and sometimes it's good when you're getting new insurance companies because they're more favorable. It's easier to work with them. So it might be better, it might be worse. We'll have to play it by ear and see how the next 5 years play out. But agents are definitely feeling it because the agents we speak with that are very good with that handle commercial policies, they're saying this is probably the worst time they've ever seen in 30, 40 years in terms of insurance because they have a client insured for 10 years. All of a sudden, the insurance company is dropping them for no reason.
Mm-hmm.
So they're having a hard time to put them in with finding a carrier for some of these insureds.
Yeah, and I think we're seeing that across the board here in Florida, both residential, commercial, because so many carriers are leaving and just leaving it to the insurer of last resort, right? They're instituting laws now to try to get a handle on this because it's going to be a problem, but it's just going to get bad all over again the next time we have a really bad hurricane, right? Then everything's going to get jacked up again. More insurers will leave. So I don't know that there's a good solution to this, but people are certainly looking for it because otherwise it just becomes unsustainable. If your insurance costs get too high, then it becomes economically prohibitive to build or insure. And then you really have a problem.
Yeah, you would. The worst thing would be you go to places in Florida now that were hit by the hurricane that we go to, that we did claims where you could see which houses didn't have insurance or which houses fought the insurance. That out of 10 homes in the neighborhood, 5 are rebuilt. The other 5 are still in the same stage they were after the hurricane.
Yeah. And so what are some of your top tips for reducing the cost of insurance? Are there things that you can do that reduce your rate? Just like with, I don't know, like car insurance, right? You get safe driver discounts. What is available, especially on the commercial real estate side, to bring some of those premiums down?
Yeah, you can request a higher deductible. Coverage on a building, knowing what your building would take to replace if it was a fire or something, make sure you don't have over coverage. You can always get it evaluated. Say, hey, you have me at 10 million in coverage. I only need 5. I don't, oh, that's just us, the computer model. That's what it took. So no, you do that. Raising your deductible is another one. Some of the endorsements, if you have a new building, law and ordinance coverage, that building code, you might not need that for the first 5 years because building codes aren't going to change that much drastically in the 5 years. So that's a coverage you can probably, hey, I don't need that coverage for now. Hey, you have me a sewer backup. We're on a septic. We're so high up. We're never going to even, that's not something that's going to happen. So just some tips like that, some stuff, but it's hard to take coverage away. You never want to take coverage away to lower a premium. And a lot of people are, and you don't want to go to crappy carriers either. But some people will right now to save 2-3 grand a year. Middle income has got hit so hard with inflation. They're dropping coverages just to get the premium that they can afford to even keep insurance. So most people are now being insured just for a fire. A lot of policies, there's so many exclusions. Literally, the only thing you're literally covered for is a fire. And even then, this isn't paid.
Yeah. And a lot of multifamily people are value add investors, right? They're trying to improve the property in order to make it worth more. Are there things that we can do on the value add side that both add value for the tenants and also might reduce our costs from an insurance perspective? And what I'm thinking about here are like safety things, increased lighting, cameras, gates, things that improve the safety for the tenants involved. And so maybe that reflects on the insurance as well.
Yeah, that would be probably the best question that would be for with the carrier that you're trying to insure you with. But I know that some of the stuff they look at is Hey, do you have smoke alarms? Is there security cameras in the building? Because those lower the risk. And is it worth it? Because sometimes you can ask the agent, okay, you have me with this carrier. It's $3,000 a year, and you're asking me if I have cameras and if I have fire sprinklers. Let's just say I do put cameras in. How much is my premium going to go down? Oh, you can save 100 a year. For me to invest 10,000 in camera system, for you to lower 100 my premium by 100 a year is not worth it.
Sure.
It might. So then that's a good time to ask the agent, how much am I saving if I do these things? Sometimes
Right.
you might have your cars insured with one carrier and they're giving you a great rate. And then you're taking your home to another carrier and they're saying, hey, if you bring your cars over, we'll give you the multi policy discount. How much is that discount? Oh, it's $50 a year. Oh, it's not worth it because I'm saving 400 here. So you have to be smart and ask those questions when you're getting insurance.
Yeah, and I think that's like an important aspect too, right? Not every carrier has the same discounts for the same things. So how does that work when it comes to shopping around? Should people have an insurance broker, or is that something that you do as well? What's the best
We
course of
don't
action there?
we don't sell any policies. We're not agents. We do recommend agents. There's a couple of agents we've recommended that we know cover every state that actually know commercial policies. Having a broker, I think everyone needs a broker in terms of a good broker for your policies. What's scary now is homeowners and people can go online and buy insurance without knowing what they need. Which
Right.
is when you're answering questions and they're selling you policies, you don't even know what replacement cost means. You don't know what any of the endorsements mean, and yet people are buying and being their own agents online, which is scary.
Yeah, exactly. You talked about how we don't know a lot about this business in most cases. So you might wind up overpaying, underpaying, or just being underinsured. And that's not a place you want to be, because you always hope you never have to use it. In the instance where you do, you certainly want to have enough there to cover you. Again, speak from experience, having had properties that had fires. You hope it never happens. And luckily, in the most recent one, nobody was hurt, but we had an entire building that became unusable. And that's the other thing that I think a lot of people don't realize, right? You can have a fire in one unit that maybe spreads to 2 units, and you're like, oh, okay, only 2 units are down. No, because of the nature of fire and the damage it can cause, it may take that whole building down because of the damage that's done. And now it's a much worse situation than maybe you had anticipated when the fire was first put out.
Yeah. And with public adjusters, a lot of people recommend the tip and recommendation is, again, have that stuff. If you have a public adjuster on your team, have those policies reviewed and your properties reviewed. So then you're set if something does happen. But if you do have a loss, I mean, get one involved, especially one that the PAs that handle fires, large losses. There's only a few in the country. A lot of them mostly do roofs and storm adjusting. The fire's its own like peril, it's its own literally sector for us. But the difference in the amount that we can maximize and the amount that a good PA can bring value is it's just unbeatable. For us, when we look at claims, if we charge clients 33 and up percent on claims, they still would have worked out better than they would have on their own. So their return is it just it makes no sense for someone not to hire one.
Yeah, and I guess a lot of people, especially in the business, just don't think about it. So how do you go about explaining, other than being on shows like this, reaching out to
Yeah.
investors and owners and selling the value of what you do, because they may just not be familiar with public adjusters and the value they bring?
That's the hard thing, right? It's not, no one knows about a public adjuster, right? Until something happens. Like you don't even, I don't know any attorneys, but if I got in a car accident, I'd have to start looking at, you know what I'm saying? Like you start looking them up because it's not,
Yeah.
I don't need them. You don't need them. But, and same with public adjusters. People don't even know, a lot of them, that they don't, especially in the Midwest, that public adjusters exist. In Florida, California, New York, they're maybe more known. But for us, it's been being on podcasts, it's being on social media, it's writing articles, it's trying to educate people. And so when they're searching, hey, I had a fire, or what do I do after fire, that we come up with articles. So people could get, oh, shoot, there is someone there. Let me look it up. Otherwise, if you do a claim on your own, you're basically it's like going to court without an attorney. You're gonna represent yourself against the insurance company. And then you got to remember, the insurance company has their own adjuster, their own agent, their own contractors, their own vendors. Everyone's working for the insurance company. Yet that adjuster then comes and says, hey, I'm your adjuster. It can't be it. You can't represent both parties. You're for the insurance company. Your bonuses, your premiums, everything's paid by the insurance company. So obviously your interest is not mine.
Yeah, and it makes so much sense that you would have to do it through something like podcasts, social media, blogs. It reminds me, I like one of the most read blogs that I wrote was my tenant just got arrested. What do I do? Because it's one of those situations where you don't think about ahead of time until one of your tenants is in jail and no one's paying the rent. His stuff is still in there, and you're like, what do I do now? And you can't just throw the stuff out because that's his personal property, right? And so all these questions start coming to mind, and you have to start doing all this research. And I was like, you know what? Someone is going to run into this situation and they're not going to know what to do. At least if I write about all the things that I had to go through and what the answers were, I may save them a couple of hours of research. And I think it's the same way with you. They find that and they're like, oh crap, I never even thought of that possibility. Let me get on it now before I'm in the situation where they're calling you in a panic because the bad thing has already happened.
Yeah, that's 100% accurate. Yeah, 100%.
Awesome. We talked a lot about that and it was super interesting, but now we do need to roll into the turbo round. Are you ready for it?
Yes, sir. Go.
All right, let's do it. First question. What is one red flag every investor should look out for?
And I'll answer these pertaining to insurance. If the adjuster says, hey, you don't need, the agent or adjuster say, hey, you don't need a public adjuster or don't hire anyone, we'll take care of you. That's your red flag. That's when you call someone.
Yeah, that makes sense. If someone is saying that they got you covered and you don't need third-party help, then they probably don't have your best interests in mind.
That investor that I mentioned in the beginning that called us, that agent, that adjuster, when we initially sent our paperwork and our letter of representation to him, his first thing when he reached out to me actually was, hey, why did he hire you? We paid out the claim to the limits. I said, you paid it to the limits, but he only has an ACV policy, so you're cutting him down to 300,000. Because they stopped basically writing, there was a lot more damages. Yeah, it ended up over 300,000 in just building, and then there was a lot more for loss of rents. But yeah, that initial conversation with the adjuster was, why did he hire you? He doesn't need you.
Yeah, let's be serious here. Their job is to pay as little as legally required.
Tim, that's their business model. They collect premiums and they want a lower payout. It's fine. It's their business model. Nothing against it. And if they get away with it, and 9 out of 10 people, because that's the study, 9 out of 10 people won't fight it, won't hire someone, they're winning. So again, that's their business model. That's the business, and that is what it is.
All right. Second question: what is a myth about this business that you would like to set straight?
That PAs are storm chasers, ambulance chasers, or whatever. Yeah, that's old myth. There is a lot of storm chasers, a lot of roofers, a lot of people that do get PA licenses. But our industry is filled with great public adjusters that really bring a lot of value to people, that do a good job, that really represent clients the right way.
Nice. Yeah, that makes a lot of sense. All right. Finally, Andy, what does success look like to you?
Being able to wake up whenever you want, not needing to look at a clock, not needing to be anywhere, being able to enjoy the weekends, not have to be on your phone, just being able to leave without and knowing that stuff is running itself. I think that to me, that's success. When you own your own time.
There you go. Time freedom. Love it. All right, Andy, this has been awesome and eye-opening for me, right? I think it's a subject that not enough people talk about, but certainly multifamily owners need to be thinking about in advance, not just when the bad things happen. So I really appreciate you coming on the show. Please tell our guests how they can get a hold of you and if there's anything else that you'd like to share.
Yeah, they can definitely Google us, All City Adjusting. They can visit on our website, allcityadjusting.com. For your listeners, I'll leave them with my direct line. While we're still growing and I can still help personally as many people as I can, I'll leave them with my cell phone. That's 708-655-4186. 708-655-4186. And if you want to text me or call me, have any questions, I'm more than happy to help as many people as I can personally.
Great. We'll definitely have all that information in the show notes. Andy, thanks again for coming on. I appreciate you and look forward to continuing to see you do big things on your journey.
Tim, thank you so much and good luck to you guys. Thank you again for having me.
All right. Have a good one.
You too.